see. The other stock that we need to address here is Nvidia, because it's the worst week since November of 2018. It's been a no good, very bad week, as you know, down 17%. Leads me back to Jimmy Jitters. You trimmed Nvidia. Now you trimmed Nvidia now too.
I'm sorry, that was pretty good,
dude.
Yeah, I did. Look, the stock's been a home run. I mean, what has it done? A triple for me in about 15 months, and
maybe you should trim it at somewhere around here, not like after it falls off the ski slope and gets hit with the avalanche?
I'm going to say this again. It's up like 3 times in 15 months, and I'm going to give full credit to Josh, who's been in it forever and is up like 1,000 times in it. But I have absolutely no hesitation on this. I'm amused, and I'm amused by the pushback on it. Still own it, but I think we have to take seriously the possibility, not the certainty, the possibility that CapEx, maybe not 2025, but 2026, starts to disappoint. I'm not saying that's definitely the case. If I thought that were definitely the case, I wouldn't have a position in it at all. But I think the possibility has increased over the last week that CapEx, particularly in 2026, will be lower than expected.
27 times earnings, though. This is the cheapest you've been able to buy forward earnings. This is the cheapest you've been able to buy Nvidia, probably since I've been aware of the stock. It's
I'm not hating on it.
Not quite in Jenny Harrington territory, but it's in Jim Lebenthal territory.
Yeah, I mean, the PEG ratio, I think, is probably less than 1.
Why aren't you buying more? Why is this a trim down 17% on the week and not a buy more of what still is at the forefront about where this whole movement's going?
I think everybody in the market, particularly in the leadership names, at which the top of which is Nvidia, got a shot across the bow. I think that there's a shot across the bow, and when you take a shot across the bow, the next move shouldn't be to continue on so that you take a shot in the engine room and get sunk. It's a time to pull back and think about it. I'm trying to find different ways to say the same thing, which that this is just risk management. I'm not hating on the stock. I agree with the valuation comments that Josh has made. I do think, though, that the probability that earnings disappoint has been brought forward in time from what might have been a 2027 event. So I can't say with certainty. I'm not actually hoping to be right. I still have almost a 4% position in Nvidia.
So Liz, why don't you wrap this up for us in a sense of has anything that's happened this week caused you to reassess in your own mind where the clients that your company is advising as it relates to the market on how to think about the mega caps? Have the goalposts moved related to these stocks?
I think the competitive environment has changed, and that's something that we should have expected at some point in this AI theme. The AI theme is not a months-long theme. This is a years-long theme, and we should always expect when an innovative technology player is in the marketplace, it's going to change the competitive environment. That's, I think, what happened this week. I don't think we found out that something suddenly was wrong with the U.S. players in the market. It's just that competition changed. So to answer your question directly about the clients that we have mostly younger investors. We've got a lot of our investors between the ages of 20 and 40. They are interested in technology names. They are interested in these mega cap names, the headline makers, the disruptors.
They're probably over leveraged to these kinds of names. So perhaps.
I mean, not all of them, right? We do have an ETF that tracks the top 50 holdings on our platform. But what I would tell them and what I have told them is that you have to make sure that you're diversified into the stuff that you think is probably kind of boring. I mean, even last year, gold was beating the S&P up through the middle of the year. That's not something that typically younger investors are usually clamoring to buy. Now you have to look at sectors in the equity index, because I don't think investors are going to rush out of equities. They're just going to continue buying other places within equities. So you look at sectors like healthcare. You look at things like industrials. You look at materials. You look at some of the stuff that still should have earnings strength this year, because I think it's all about fundamentals this year, but that isn't trading at all-time highs.
All right, good stuff.